Welcome to Beyond the Press Release, a production of Agoracom, in which we take the time to speak with small cap executives after they put out important news. With us today, and it's our first interview of 2022, and it's a doozy. We've got Darren Truesdale, Chairman, CEO, Now Vertical Group, trades in Canada under Now, and for our friends in the US under Now VF. For those new to the story, here's what you need to know. The big market data is worth right now anywhere between 150 and $200 billion, depending on what source you're looking at. But more importantly, it's growing at a torrid race for obvious reasons. We're all going digital. We're doing this by Zoom. We're collaborating on Agoracom. We're all living a bigger data life. And that's why the market is growing. And I don't even know if people really know they got to handle how big it's going to be. Now is a big data software and services company. What they do is they help the world's best, and believe me, I tell you that because we're going to tell you about some of these customers, the world's best business win in the digital economy by providing them with innovative tools to make smarter decisions. And we'll do a little deeper dive on that. More than just lip service, revenues for the quarter ended September 30th were $950,000 approximately. Gross profit is just over $800,000, but on a full year pro forma basis, after you take into account some acquisitions, because the company's been doing some mad M&A, their performance at approximately $7.1 million for the 12 months ended September 30th. Let's talk about the company. Darren, welcome to the show, my friend.
Thank you very much. Great to be here.
Hey, everybody's talking big data nowadays because it's such a massive market. We know it's growing, but we call out a lot of companies because very few are actually executing. You've got some tier one clients, and if you don't mind, I'm going to read just a couple of names here. And you've got 6 different categories, but in the enterprise group, you got Ford, General Electric, Santander. In media, you got Netflix, Prime, HBO, Universal. It's unbelievable. What are you doing for them that makes them a client of Now Vertical and or the acquisitions that you've made?
So we go about the market, about the marketplace in a few different ways, providing some very specific tool sets, skills, and strategies. Taking the media sector, as you mentioned, we have, through acquisition, the best media analytics product that exists, which is Affinio. And that product has been in play for a few years. And that product specifically provides the industry and its clients graph analytics for their customers to better program for their customers, to make investment decisions as to what programming they should be investing in, and how to market their programming to their customers, as an example with media. In other sectors, in retail, the same product is used for the same reasons, but obviously in a different sector. So our advanced approach is why these clients are coming to our group.
Yeah, so, and I think for everyone at home, by the way, those are just some of the tier one clients, guys. But I think that provides that third-party validation that everyone now knows is so important at Agoracom, because truly, Darren, people like me and most retail investors, we don't know how to measure one big data company versus another big data company, right? So isn't it
most companies don't understand it fully yet either, and that's really the opportunity here. We have IT historically has been making these decisions for companies or for their companies, and that has mostly been infrastructure. The actual power of data for a company is through the general business side. So the users, the end users of all things data are business users. And still today, only 41% of enterprise companies have capabilities in the general business. So there's so much room to grow. So the tool sets are here. We're providing the tool sets in our various software. Our customers need to upskill their teams to take advantage of that. That's the big opportunity here. Just kind of
that's surprising, shockingly, but that's great for Now investors that only 41% of enterprise companies have this figured out, because we just all assume they've probably all got to figure out. They work with IBM or big Oracle, and they've got all this big data worked out, but it's far from it.
Yeah. So, again, we're at such a early stage of maturity in all things data, even after all of these years, after all of this, advertising and messaging in the marketplace, IBM, Watson, all these things that you mentioned, we're still of the earliest days. So the opportunity is far greater than we can predict in the marketplace, because every decision a company is going to make in the future will need to be data backed. There's too much risk, there's too much compliance and regulation in the marketplace. It's not getting better, it's getting worse. So there needs to be data behind every decision that an enterprise makes, period, end of story.
Another thing I like about you guys when I look through your deck is you're not shy about who you're competing against. Typically, Georgecom data, when it puts up its comps, will say I'm competing against ABC and XYZ, and you don't really know who they are. But you've got Palantir, IBM Watson, C3 AI as comps. So you guys aren't shy about who you think you can beat, because these are the biggest names out there.
Well, I think we're doing two things when we think about our comps in the marketplace. One, the great news for our company and our investors and our partners and our employees are there aren't that many comps doing what we do. The field is wide open. So if you take the market and the size of the market into the hundreds of billions of dollars in the next 5 years, there is ample room for all of us to have extremely large multi-billion-dollar revenue businesses. So leaving that aside, then you start thinking about the product offering and go-to-market. Palantir, almost 20-year story, venture capital backed, building for many, many years, an incredible platform, very, focused on the advanced side, mostly government, et cetera. We have, we share some principles, we share some capabilities, we share some approach, but we are a little different. We aren't just focused on the absolute largest ticket. We want to focus on the enterprise more so, in our government space, providing a more approachable, easier to swallow ticket price. So that's some differentiators we're doing, and most importantly, compatibility. We are compatible with all of the existing IT investments that have already been made by enterprise, and that's where we're at today. And it's an important distinction which sets us apart. That's where we're at in the industry today. We've had these companies, major companies, Snowflake, Amazon AWS, Microsoft, provide the foundation for the innovators to innovate. And now that's what we're doing. So C3.ai, Alteryx are probably a little closer in our aspirational comp set, meaning revenues to the go-to-market. That's who we look at, and we're competitive. And our approach is very different because we're doing it through M&A. We are a pure play consolidator in this industry, and we're going to do it in an accelerated manner, whereas these other names have done it in 15, 20-year time periods. We're going to try and do it in 5.
And let's talk about that, because you have gone through a torrid M&A pace since going public back on July 5th. That's another sign of third-party validation, because if I'm going to sell a Agoracom one day to a bigger company, I've really got to put my trust in them that they're not going to blow my life's work by collapsing at the corporate level or failing at the business level. What does that say? And we'll talk about some, like Allegiant, we'll talk about that in a second, but what does it say that companies are willing to look at you and say, Darren, yeah, we want to be part of the Now Vertical family?
So that's a really important point for our story. And M&A, again, is the genesis of what we've done. 5 closed deals, 6th on the way now that we've announced, more to come, obviously, in our strategy. If you take our last closed acquisition with Affinio, which is an incredible technology story out of Canada, great customers, great tech team, so many amazing components of it. They believe in the federated model. And the federated model really is the sell we give to our targets, which are join this group of incredible people, companies, clients, and investors and partners, and you're going to have a better shot of materializing long-term value by taking stock in our transactions, because the upside through a typical acquisition process, if you're not reaching max velocity scale on your own, is going to likely pay better than some cash deal from some larger company that you may or may not be able to close. So it's a compelling offer, and so compelling that, the last acquisition we made with Affinio, they're taking our stock at a premium. And that's an important distinction
Wow.
at the time.
Yeah.
And we're really pushing that. Every deal's different. Some deals, we may change our approach because we may value our stock, more than the market does at the moment. So we may get a little, more focused on limiting the exposure in our paper. But the transactions really have those flavors, and that's what is really motivating these sellers. And the sellers want to be put, another, kind of qualitative point, these sellers want to be part of something bigger. And that's not just, to make money. They want to be part of a bigger story. And, a lot of people in small cap space, use M&A as a strategy. Our strategy is M&A. So we don't go to our targets and say, we're so great, join the party. And maybe 1 + 1 = 3. It's 1 + 1 = 1,000,000, because you're part of that math equation now. You're not just a bolt-on. You're now part of the fabric of what we're building.
Go ahead. Were you going to finish your point there?
Yeah, no, that's really it. And we're trying. And then the other thing too is keeping it simple for our targets. Like, we don't need to make this complex. Like, they've got great businesses already. They've got great customer relationships. There's some minimum things that they need to have in their world to be,
but they've got even more autonomy with you than they would inside of a major Fortune 500 tech company, where they got to get pigeonholed. Don't move. You stay right here. And that probably is probably antithesis to how they want to grow their business, how they want to live their lives inside of their company.
There's a reason why founding management typically, leaves after, the lockup period in a big company corporate acquisition, unless things work out well. It's definitely higher on the everyone leaving than staying, and the averages. I don't have the number in front of me. In our case, our acquisitions for the foreseeable future are the foundation of our company.
Yeah, these are the companies. When they acquired GeorgeCom, the founders of the companies being acquired can't look at their watch fast enough, counting down the days when they can put in their contracted time. They got to stick around, then they run off and join and start something else. On that note, let's talk about right before Christmas, you announced a definitive agreement to acquire Allegiant Defense. Again, a company not a lot of us know, but what we do know is this: their current contracted revenue backlog for the next 3 years, from 2022 to 2025, is $66 million. But what I really liked on top of that was Angel Diaz, a CEO, who said this in his quote: "This acquisition by now is going to jumpstart a new chapter for our company. The power of the Now platforms and vision of the team means that we'll be able to bring a whole new range of critical solutions to bear for our clients." So you're not just acquiring them and saying, okay, guys, go run and we'll consolidate your revenue on our balance sheet and together on our income statement, and together we'll just form a big company. You're actually making these companies better. That's straight from the CEO's mouth.
So that's the beauty of our model. And again, we've been doing this for 14 months since starting this. So the speed and the accelerated aspect of this is an important component of our story. When you think in the next 5 years, we want to be at the market cap and or revenue size of the competitive set we mentioned. Using Allegiant as an example, incredible business, incredible past performance in the government space, which means the better you perform, the better your opportunities for new contracts. There's a $66 million backlog that's really exciting. That's not a pipeline, that's contracted revenue. Then there's a pipeline. Then there's this synergy point, which is, we don't talk about really that much in the public sphere, because it's really hard to quantify, and anybody trying to value their business and future on synergies, it's just not the best method, because it's hard to predict, and it's a lot of loose kind of aspects. In our case, you have a business that doesn't have any IP with Allegiant. They've been servicing customers without their own set of IP. Now, as part of our group with Now, they have IP. They have advanced analytics services. They got data science tools. They've got graph analytics. They've got Snowflake privacy safe solutions, and anything net new we're buying and bringing in. So for Allegiant, their whole world has completely opened up. So that 66 million plus a large pipeline becomes a lot bigger of an opportunity. And the kind of, cherry on top of the story here is the margins with our IP and our software products are far better. So their margin profile will improve through this model too.
How does I have to assume every acquisition you make, you talked about Affinio earlier, now we're talking about Allegiant, where it's a definitive agreement. I've got to assume every time you make an acquisition and announce it, it becomes two things happen. It becomes easier to convince GeorgeCom to be acquired by NowVertical, and it probably opens the door to more companies calling you up and saying, hey guys, we see the great work you're doing. We'd like to talk about potentially becoming part of NowVertical. What is the pipeline looking like on the M&A side, given how important it is to your business plan?
That's a really, really great point. We have a very large pipeline that we've cultivated ourselves, or we've had people introduce, their companies to ours. We have a great source of deals coming from, friendly venture capital firms, even private equity shops and bankers alike. We also, our corp dev team will go find businesses that we like or think we like, or like the profile in the marketplace, and we will cold reach out to them. We are very aggressive trying to find targets too that will map to what we need in the marketplace. And some of these deals we've done are just straight up, we found them in the market, or ones we're working on. So that the pipeline itself is very significant right now. And it's going to continue to get more and more significant as our profile grows and builds and the story gets bigger. We're getting more and more credibility with our M&A process. We have people, I think it's a cool thing that's a lot easier today than it was 14 months ago. But now any of these potential targets can call the existing targets and say, how was this process? Did these guys do what they say they're going to do? And, that's important to us. And whether that's targets, employees, partners, and investors, I'm really trying to change the dynamic, especially, as we move from small cap to medium to large cap, to be a very transparent group here. We want our investors to understand what we're doing. We want them to feel part of the story and the team, just like we want the targets as they come in, because they are all shareholders. So this is a shareholder-driven company. Everybody in the story is a shareholder.
Yeah, and that's why I led with that, saying, it's getting easier and easier because you're probably getting better and better reviews. The numbers are showing up, and it's getting easier. But people want, it's GeorgeCom data wants an equity event. He wants to get away from just being a founder and orphan, and it's even more attractive now for him to say, hey, Darren, let's talk about you acquiring GeorgeCom data. So that's exciting for me, Darren. And correct me if I'm overstating it, but I would have to assume that just accelerates your pipeline, not just the size, which is the quantity, but the quality of what's coming to your table that wasn't there 14 months ago. So to me, it just seems
very important point, George. Yeah, George, great point. What's happening now, and this is how good consolidator stories kind of go. Your size and your scope will increase with every deal. Not every deal is going to be bigger than the last, because you're going to want to tuck some things in as you go. But what we're getting across our desk right now in the pipeline as stuff we're working on is starting to get larger. And, that's interesting and exciting, and equal parts, you got to be very strategic. And we've got a very defined plan that I've talked about publicly a lot, which is we are right now happy in our Canadian marketplace, building our business brick by brick, acquisition by acquisition, customer by customer. And in this year 22, we have a very large goal that we are going to acquire enough scale, meaning revenue scale, to matter in the US markets. And to us, that's about $100 million top line. So you will see us execute against that plan. We're very committed to that plan. The deals we've announced all contribute to that plan. Allegiant is a huge opportunity for us to really scale revenue very quickly with the existing contract profile, as you see. News coming down the pike soon, so we're working on lots of other stuff that's going to be, great for us to get out to the public market to understand our story. Once we hit that scale and move to the US, we then have enough revenue scale to matter to our competitive set and to the investors, broader investor community in the US, whether it's against C3.ai or Alteryx, even though everyone's going to have a little bit of a different approach too, which is cool. Our marketplace is
and big
really,
data changes so fast that you can't define and pigeonhole it right now, even if you wanted to.
we could coexist with everyone too. This market is so fluid.
Right.
Like, that's my point. Like, what I get up excited about every morning is we can coexist with everybody right now. That's a large player in our space, and it's too big for all of us to take down as sole provider.
No.
So we're in the right space, right time. Everything's going right for this. So it's just execution. It's just execution, supporting our partner network, supporting our investors with great information and transparency, and turning that into execution in the marketplace. That's the sauce.
And when you talk about execution, I take a look at the team behind Now Vertical, and it's a pretty incredible team. It's not just Darren, being a one-man band trying to keep everything stuck together. And now you've got an incredible group. But what I also like is that insiders, I'm not sure what the latest numbers are after acquisition, but you guys are ballpark insiders, are ballpark 50% owners of the company, fully diluted. What should that signal to everybody about how you guys believe in your business going forward?
Oh, we're extremely long on our business. We have a substantial stake in this business. Beyond myself, the entire team is well positioned in the story. Like I said, everybody from new acquisitions on are all shareholders. So what that would tell me as an investor is these people, this team is going to take this where it needs to go. From a long-term success perspective, they're committed to long-term success. This isn't quick wins. This isn't trying to get
pad the income statement with a bad acquisition. That's what I want to get across to everybody from my perspective as an investor, which is you're not just going to try and pad the stats by saying, we haven't done much all year. Let's just go make an acquisition quick so we can look like we're busy and earn our salaries and stock options. You guys are insiders. It doesn't mean you're going to make perfect decisions every time, but you're definitely not going to make bad decisions against the interests of shareholders, because you guys are as big as anybody.
Yeah, the alignment, again, it's always, not always, but typically when you have great alignment with shareholders, the real value of the company can emerge and gets on a track. And it may not be as fast, and your market cap may not explode the way that everyone hopes it would day one, but it tracks the right way. If you look at our market cap, it's tracking the right way. And that's because we are doing what we said we are going to do. We're not overselling anything, but we're not underselling anything either. And we're continuing to do it. We put our heads down every day we wake up. We watch our personal net worth is tied to the success of the story. It's aligned with shareholders. That's a kind of perfect situation, I think. It feels good every day to wake up with that alignment too.
And as a result, you don't have to oversell or sell anything, quite frankly. Your actions speak louder than any words you can say. And look, you guys just went public in July, so not a lot of people even know about you guys yet, but look what you've been able to accomplish in a very short period of time during, by the way, what was a very challenging time for the small cap market. The last half of 2021 was challenging on its own. So the fact that you guys were able to pull off some great successes is amazing, and I can't wait to see what you guys are going to do in 2022. Last word to you, Darren, because we could go on for another hour. Trust me, I love this business.
Yeah.
We're going to have you back on a lot. It sounds like given the size of your pipeline.
I could go on forever too. Look, the end of the day, I'll leave you with this. Again, just keying off the last point, we are we're executing and doing things we said we were going to do, and we're going to continue to do that. The small cap space, there are some great small caps coming and emerging. We feel we're one of them. And there's ones that aren't so great. And, we just want to make sure that we're distinguishing ourselves from, the good from the bad. We're the good. We're going to continue being good. We're going to, do what we need to do, which we think will give the performance our shareholders need to be, happy and part of our story. That's what we're here to do every day.
Well, from my perspective, you're executing, because we can see that. You guys are putting your money where your mouth is. We can see that. And now this last stage here of transparency, which is great that you're going to be taking the time to speak to investors like this. We're doing shareholder Q&A videos where we'll invite shareholders to actually ask questions, then we'll answer them right in video, and even do some, forum engagement starting pretty soon here in January, so that investors can come in and have good, moderated, civilized discussion and really be a part of the Now story. And I'm happy to be a part of it, Darren. Congratulations on what you guys have pulled off so far, because look, I'm the founder of a tech company. I know how difficult it is to do what you're doing, and you guys are doing it fantastically. Thanks for taking the time with us, and can't wait to see you next time, my friend.
All right. Thanks, George.
To everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Darren Truesdale, he's chairman, CEO of Now Vertical Group, trades in Canada under Now. Love that stock symbol. And for our friends in the US, under Now VF. For those new to the story, and that is going to be a lot of you, you got to start doing your due diligence now. 2 ways to do this. Our profile's almost ready because the new year just started. It's almost ready for Now Vertical. So look for that. But in the meantime, hop over to nowvertical.com and start doing your deep dive due diligence. Because if you believe in the future of big data, and we know it's $150 to $200 billion market already, we know it's growing. Why? Because look what we're doing right now. Data is just being created at unstoppable volumes. And if you believe in the company's execution already, doesn't guarantee future performance, but if you're confident how they're executing already, then you've got to do your due diligence in Now Vertical. Hopefully you discovered your next great small cap tech company. Thanks for joining us. Have a great day. See you next time. Hey guys, the video's over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our YouTube channel so you never miss another great Agoracom small cap video.